welcome. You're watching Market Meter on Money9, India's first multilingual platform for personal finance from TV9 News Network. I'm Sakshi, Batra, and on this show, we will discuss all the market parameters and help you understand how the markets have moved in the first half of trading session, as well as we will get you introduced to a fundamental expert who shall explain to you what will be the most prudent strategy for investors to follow in the markets right now. Joining us is a special guest today, Mr. Kranti Batini from Wealth Mill Securities joins in. Mr. Batini, good afternoon, and thank you very much for joining in on this special show. First up, I'd like to understand from you, how are you looking at the markets currently? Of course, we've been seeing a whole lot of volatility in the last four or five trading sessions. We have been opening with a gap up, but most of the gap ups are being sold into. There's been, off and on buying from the FIIs as well. But overall, how is the sentiment of the markets currently?
Actually, currently market is in a pure consolidation mode. What we are witnessing is before the end of the financial year closure, some sort of profit booking is taking place at the higher levels of the markets, and for the tax adjustment reasons also, some HNA investors are doing some kind of selling with respect to tax adjustments also, that we can witness at the trading counters at most of the stocks. By and large, markets are in a consolidation phase, and this consolidation phase can continue for next couple of weeks.
Okay, so next couple of weeks also we may see the markets to be range bound and in a consolidation mode as well. But when we talk about particular sectors, say for example an IT sector, which has been the flavor of the month so far, we've seen counters like Tech Mahindra, HCL Technologies run up about 9-12% in this month so far. But I wanted to understand from you, is this space going to be and should be in the focus area of the investors even going forward from here? Is this space an attractive sector that you're looking at?
Yes, definitely, Sakshi. The IT space is going to be the flavor of the market in the next coming quarters. And where we see the value is more in the mid cap IT space. As you rightly said, there is a activity in stocks, what you said. Of course, in the mid cap IT space, like the newly listed stocks like Mindtree Techno, uh, uh, Happiest Minds. Okay, there is a good activity that's taking place with respect to the mid cap IT is concerned. But investors differentiate currently where they need to chip in. Uh, they can probably they can allocate 40 to 50% of their portfolio towards the large cap IT space. Um, uh, Names like Infosys and TCS, and the best way is uh, to get the extra beta. They can go to the mid cap, and sometimes if the investor is so much confident, small cap IT space also gives a lot of headroom in next couple of quarters. The main reason to look at IT at this current point of time is there is a complete revival across the globe. The growth is coming back, and companies, they are going to increase their IT spends.
Okay, so IT is going to be the flavor of the next few quarters as well, and definitely in less than a month from now, we'll be also reporting the earnings of these IT majors as well, and a whole lot of focus will be on how the revival has progressed post the pandemic for these IT companies as well. So you can keep on your radar based on your risk appetites, the large caps and the mid and small caps as far as the IT sector is concerned. But Mr. Patine, I also wanted to ask your view on the current IPO rush that we are seeing. We've already seen about 14-15 companies come up with their IPOs in the year 2021. 17,000 odd crore rupees have been raised so far already. There's a whole lot of interest from the investors. And in this week alone, we've seen about 5 companies which have launched their IPOs. For every IPO, there's a whole lot of interest from the retail investors' perspective. But what is your view, and would your advice be for the investors? Is it the right way for the investors to look at, to flock towards the IPOs and maybe just go in for listing gains? That is the larger trend that we have seen so far.
Sakshi, you are right. There is a clear cut. We can see the exuberance is evident with respect to IPO is concerned, and the numbers are quite evident. Many IPOs are getting subscribed, oversubscribed, multifold. But I'm not sure how much the investors are getting end of the day on their table. How much the allotment they're getting is a big question to every investor. Suppose if I'm applying for 1,000 shares, how much the allotment, what is the percentage I'm getting, every investor is getting is a big question in front of the investors. Of course, there are many IPOs. What we are witnessing is listing gains are high. But my advice to the investors is be try to be extremely cautious with respect to IPOs are concerned. Please go and check the promoter background. Don't just run for a couple of days listing gains. And my suggestion to the investors is just wait for a couple of quarters uh, results of these companies, and there will you will get opportunity for most of these IPOs to get much favorable valuations. As there is a saying on Wall Street always, Sakshi, on a lighter note, in the beginning, investors have money and the promoters have vision. But during this IPO gush and rush, at the end, investors have vision and promoters will have money. Okay, that should not be the case. So be selective and cherry pick the stocks and allow the company to perform and see the company results for at least 2 quarters.
Okay, so that's a very wise advice that you've given for all the investors and viewers who may be watching this space with a keen interest in the current market scenario as well. Let's move on to speak about some of the stocks that you have, for our viewers today. Let's start up with a stock that, you would want to recommend from the large cap space.
Sakshi, at this point of time and this market juncture, Reliance Industries looks very attractive, and Reliance is a proxy to the India's growth story. Uh, on the SOTP basis, some of the parts uh, valuations basis, Reliance looks very attractive at these levels, and I advocate investors at every dip. Reliance Industries gives an opportunity to participate in India's growth story. It can be in technology space, telecom space, and the oil and natural gas space, and also the retail space. So Reliance is uh, uh, in a good position to take the advantage of the growth story. So at these valuations, Reliance is a compelling buy, and every dip in Reliance is a good uh, activity for the investors to accumulate in their portfolio.
Okay, so every dip should be looked at as an accumulation opportunity for Reliance Industries by investors. Mr. Batini, let me also bring up some of the stocks that you have already previously discussed with us on Money9, and they have also, given good returns in the past few days and weeks as well. Let's start off with your, recommendation of Quick Heal Technologies. I remember that you had given this recommendation on 27th of Jan on our Money9 show, and it has already given a peak return of about 26%. So, Quick Heal Technologies, what would your recommendation be? Even now, do you think that investors can look at it as an opportunity to add on to their portfolio?
Yes, actually, company is sitting at a 200 crores cash level. It's a zero debt company, and there is a greater emphasis is given towards the cyber security is concerned, and the company is in the mode of buying some companies which are in the mid and small cap space with respect to cyber security space. So the company is in a well position to take the growth in the cyber security space, and I can say this is the only pure uh, standalone cybersecurity stock that listed on stock exchange with zero debt. And recently, company have announced a buyback offer to at 240 rupees per share. So every dip in this stock is a good strategy to accumulate in individual's portfolio. And I request investors subscribe for the participate in the buyback at a higher price. But I still confident about the fundamentals of this company, and Quick Heal Technologies offers a good value buy at these levels.
Understood. And from the pharma space, also you've talked about Wockhardt Pharma in our previous shows. So, what would your call be today, maybe?
Wockhardt Pharma is in a consolidation phase as we are witnessing whole pharma space after witnessing a humongous rally last 15-20 days. The enter the pharma space in a consolidation phase. And work hard after touching the peak of 550 levels, we are witnessing some kind of profit booking with respect to workout pharma is concerned. But our stance with respect to workout pharma is concerned, use this dip and consolidation in the stock to enter into the stock, and just hold for a couple of quarters. The stock will derive and the stock will deliver good returns to the investors.
Okay, for a long-term perspective, Wockhardt Pharma from the pharma space may deliver huge returns, and that is what you can look at in case you're looking for opportunities in the pharma space as well. Thank you very much, Mr. Batini, for speaking to us today on this special show and sharing with us your market outlook and your stock recommendations as well. Let's move on to see how the markets are performing at this hour. Remember, we had a gap-up opening today, and today, of course, the gains are still there as far as the benchmark indices are concerned, but they have definitely come off the day's high point. 50,000 still protected on the Sensex. There's a gain of about 237 points that we can see on the Sensex, 0.5% up. Nifty 50, however, is still below the 15,000 mark, 14,792. That's the current level of Nifty 50 with gains of about 70 or 71 odd points. It's up about 0.5% in trade. The Nifty Bank has still held on to the opening gains somewhat, and 0.9% is the kind of gain that we are still able to see on Nifty Bank. 34,500 odd levels for the Nifty Bank currently, 280 points addition. If you look in the broader market space, however, the small cap stocks have now slipped into the red. Some of the selling is actually coming in from that front. The mid cap index is still holding on with 0.3% of an uptick currently. So with that, we wrap up this edition of Market Meter. A whole lot on the other side is awaited on the market action front as well as on personal finance. So do stay tuned on to Money9. Thank you very much for tuning in.